Fibonacci here. We have to put a Fibonacci here. You can here, let's get the, where the fibs for this. When these are the indicators of is it here? Here. Here.
No.
Oh, here. Fine. Here. Oh, okay. So we take the Fibonacci retracement. So if you're dealing with Fibonacci retracements, yeah, if we have this area here and here, we want to see what the market is going to do here. So we put it at this point and this point to see what the market is going to do within a certain level or a certain area. So we can put our fib, let's example from this and this one here, and then we extend it. Like this, we can put our fib on these areas to be able to check the retracement zones. And the retracement zones, for those who don't understand the Fibonacci, it should be within the certain level of our Fibonacci retracement. Is that making sense? So anytime, now I know it's going to be quite crazy for some of us here. I know, I can see the faces already. So if you use the Fibonacci, I think we'll even talk more about the Fibonacci on Monday. If you use the Fibonacci, most of the time what you want to do is you want to see where the market wants to retrace to before it makes a certain movement, okay? And those levels at which it is retracing to, those are key hidden supports also or resistance. Is that making sense, please? Those ones can be key hidden supports or resistance. So from where we are with our fib, if we have to make sure our 100 is the one that is on top, and then this one is down here. So from 0, as the market keeps on moving up, you see it went to a certain level of our Fibonacci, and it was 0.61. That's a zone which we usually say it's a golden zone on our fib. You see, once it was there, it didn't completely go up. From there, we had a very, very nice positive turn to another Fibonacci level. You see, but from where the current price is at, with the current candle, this one is it's being chaotic. See. So as I was saying, traders, as I was saying, whenever you're using Fibonacci retracement here, what you want to do is you need to check where the market is going to retrace to. So from the points of our Fibonacci, you see these lines on our Fibonacci? Can you see these lines? And have you seen what the price has been doing within those lines? Okay, so the current red candle has dropped down to this 23, isn't it? 0.23. Okay, so from this area by itself is a strong zone because of, you see these tails? Can you see this tail over here? You see? Can you see a tail here? Oh, we can see the tail. We have to, it has gone again. So there is a certain tail, so it has retraced to a certain level of our fib. If the price is maintained not below that tail, then that still tells us that this market is going to be what? Is going to be going up. And that is, as it is going up, is going to again another level of our Fibonacci. How are we getting that? So most of the time as the market moves, it retraces at that sort of level, at those levels where you can find your entries. That is still telling you that there is that buy that you're looking for. So, the buy that you're looking for. So we're looking at the buy to be able to distort this resistance. Can you try to zoom it in? I hope it doesn't disconnect or... then bring it. Can you now see this red? This, okay. This. Can you see this?
Yes. Yes. Okay.
Can you see that tail over there?
Okay.
We cannot see it, right?
Yes.
So this tail, it is still within the 0.23 of our Fibonacci retracement, isn't it?
Okay.
So within this level at which this price or this candle dropped to, it is still strong for us to say that if I had my buy trade there, okay, it has retraced to that level, I can take a trade for a buy. Are we getting that? And as I'm taking a trade for a buy, I'm looking forward for it to clean this area, isn't it? So I'm looking forward for it to clean this area as we go again to this Fibonacci retracement. And that's the same area where we had this, our rejections, or at that resistance. Is that making us to understand? So we can reach there, and then again we retrace. We retrace at the second level of our Fibonacci here. So if we come here, again we get another entry to do what? Now to try and break this. And remember traders, the moment we break this one here, we're trying to break this resistance. As we break this resistance, we're going to find ourselves at the golden area of our Fibonacci, which is 0.6. And the golden area for Fib tells us that if we close above that area, then that nice buy is still viable. Is that making sense? So we're getting the Fibonacci usage. We talked deeply about it, but I hope you, is that making sense, please?
Yes.
So if you want to use Fib, but I encourage for the other traders, for now, do not use the Fib. Understand the candles, and then you'll complement it later on with the Fibonacci. So as far as the Fibonacci as the guy is concerned, that is how you should use your Fib. But with no Fib also, other knowledge of that area can still give us potential movements. See, from here, break of this, where we lead to trace to. Have you seen this big tail? Can you see that one there? We can draw a line to it. Once we draw a line to it, meaning we want it to break this one, isn't it? So, break, comes here, pull back, and then you do what? Go up. Can you see? It's because of what? These tails. So these tails are very, very necessary. And there is even bigger one here that has not yet been closed by this. Can you see that? Yes. So what it's trying to do is trying to cover this tail. So these long tails you see in the markets are very crucial. Have you seen how we draw our trend, brother? We've touched on the tails. If we were to just put it on the board, have you seen how we'll be leaving lots of information?
So that was the way you find out there will be a pull up,
pull back.
For the down.
You say here?
No, down.
The down one. This
last one. The place you did the first one. Below the support. Below the support. The yellow one.
Come on for you, please. Oh, the yellow one. This one there.
You did some pullback. Is it the way you identify it because of the long wick?
Because of the wicks, yeah. Because of the wick is very, very important. If you zoom out this chart, the way we did it here, these tails are very, very important for you. And most of the time you find within, it has not, I've zoomed it out here. It's not reflecting. It's not reflecting. It is not yet there. Let's come back. Okay. So you see, most of the time, as far as the tradings are concerned, you see any area you find these long tails, the tails that were left, right? Those are zones where the market will come to for us to even have these pullbacks, because there is an information there. Are we getting that? So any area you see a big tail, as this market is moving, this tail, okay, the market might come and test where this tail is. Closing above this tail can give us that, or can give us that. We have what you call wick fill. You learn it with time. We have what you call wick fill. We have what you call reversal movements. I don't want to saturate your mind with many things. So I know some of us will be confused when we leave here. From where we started. Has anyone been confused?
We are not.
You okay? Okay. Okay.
But my question number one is, now this is on the 4-hour time frame.
This is a 4-hour time
so
frame.
what do I do? Do I have to
go to the lower time
frame? Waiting for the resistance level to be touched, my key zone to be touched. How am I going to wait? Should I be checking it every day, or I should be on my screen watching it all the time?
That's a nice question. You see, so if I zoom in this chart, now the type of trader comes in. We have intraday trader. Don't forget that. We have day traders, we have scalpers, we have long positional traders. So I'll say this market, your main target is from here to here. Example.
Yeah.
So how many candles in a day, how many 4-hour candles makes a day? Six. Isn't it? Six. 6 makes a day. How many 4-hour candles makes 1 week?
42.
Sure?
1 week, 42.
42 candles, another one?
30. 6, 5.
80.
6, 5.
Okay. Yeah. It's correct.
24 times 5.
I say 7 days.
You see, so when it comes to the candles, brother, as per your entries are concerned, we've already potentially seen where this current red candle is at. It's a zone where a nice buy opportunity can be exploited if we respect not closing below this. So what you have to do is you go to the lower time frame. You see now that was 4-hour time candle, yeah? If you go to 4 hour, 15 minutes, this one 4-hour candle has how many candles in it?
16.
16, isn't it? So now let's disregard this. Let's go to the 15-minute candle and now deal within this area, within this current candle, by the way. Let's come to the 15-minute candle time frame. So on the 4-hour time frame, you've already identified your key first target. Okay. So let's see where you can choose to even have your stop loss if you were to enter or to follow that trade. So if you see the current market movement on the 15 minutes, okay, let me delete this. I believe we followed, right? So we'll come to the 15 minutes time frame. If you come to the 15 minutes time frame, let me zoom out small. If you come to the 15 minutes time frame, those key areas are still, if you zoom out, these key areas are still very much visible, isn't it?
Yeah.
But you can see here we have its own lowest low. This is low, isn't it? So we have the high here, the low here, and then the market started having so-called movement, broke this, came down, and then there was a very, very big tail left there. So the market did something of that sort. Is this market going to drop down to this level? Okay. Or is this market going to keep on moving up to again that up level over there? So what you have to do here, what you need to do when you come to the 15 minutes time frame, now we can check the candlestick arrangement or the candlestick, the so-called candles that you're seeing here. We can see we have this area. You can see we have this saturated area, but can you see we had a tail that gave us a false breakout? Can you see a very, very big tail over there? So what so-called movements do we have here with the price? Can you see, first of all, those people who trade, how do you call it? Marubozu candle, bullish engulfing, what candles. You see this, there was a signal within this area, okay? But if we check this by itself, is what? A pattern, right? Isn't it? That by itself is a pattern. What does that pattern prescribe to you? And this pattern has been seen at what area? An area also where we are having this sideways so-called movement. What will this pattern prescribe to you? Example, on Monday, you are trading gold, and maybe there is, it depends on the time this guy is waking up, when the market is opening. If there was a news, then the news can help us break this pattern, or the news can help us reach to our so-called target with that particular pattern. So, coming to the lower time frame, know where you should put your stop loss for a buy that you're looking with the 4-hour time frame. Have you seen there's a tail that has been left? So some few pips below that tail is very important. You know why? Because you might find the market can come to that tail, to even close that tail, isn't it? Close the tail and eventually starts moving where?
Up again.
Keep on going up. Are we getting that? Okay. So on the 4-hour time frame, we saw the red candle on a resistance, on a support zone. And with the Fibonacci retracement, we've seen we've retraced up to 0.23. Meaning, that's an area where we'll want to buy as we are looking forward to push the price up, isn't it? So for you, when you've come to the lower time frame as low as this, we can see there's a tail. Okay? So some few pips below that tail will be better for me should I be looking for a buy opportunity. And those that will want to enter now, and have you seen the drawdown because of this tail? You see? So the market behavior here can lie to comrades and tell them we've broken